Today, the Fed made a decision to cut rates by 25 basis points, and the markets have been generally flat, a lot of volatility, but generally flat since Jerome Powell spoke. The reason why the price dropped for Bitcoin, the S&P, during the speech is because Powell said that the government shutdown led them to not be able to get all the data they needed to be certain about what December will bring. And the market doesn't like uncertainty. And so when Powell said that, the market had an initial reaction down. But does this mean that the future is bearish? No. Does this rebound mean that the future is bullish? No. The price action that happens the day of a Fed speech or decision has no impact on the future. In this video, what I'm going to do is talk about Bitcoin's trend, the Fed funds rate, the Fed balance sheet, the inflation rate, how it's impacting the current environment. What are the missing factors that we're not seeing? Because I think a lot of people are confused and they have been brainwashed into thinking that rate cuts are good and rate hikes are bad, or if the Fed balance sheet is going down, that's bad, or if it's going up, that's good. And a lot of these ideas are actually just not true. And guys, there has been a lot of turmoil in crypto over the past month with the liquidation event and exchanges shutting down and people not being able to make trades. Well, BloFin, the sponsor of this channel, you were able to make trades during that liquidation event. They are reliable, and it's the exchange that I trade on every single day. And by clicking that link below, you get 20% of your trading fees back. Every day that you trade, you get 20% of your fees deposited back into your account in the form of USDT. Click that link below and sign up today. If you go back to 2018, Bitcoin was going absolutely parabolic. It went from $200 all the way to $20,000. Others, the low cap altcoin index, went up 230,000% in 2017, I should say. And then you look at the Fed balance sheet, it was flat, actually almost slightly trending down. Inflation was rising, the orange line, and the green line, the Fed funds rate, was pumping, uptrending. Interest rates were rising, but they were hiking throughout the entire bull market. And so nowadays, people think that it's black and white, that if they do this, it's bad, if they do this, it's good. And that's clearly not the case, looking at the history. And so most people look at all of this very surface level. And if you expected that, things could only be bullish if the Fed balance sheet was rising, well, then you missed this entire bull market because the Fed balance sheet has been coming down. Bitcoin has been flying to the upside, 15,000 all the way to 125,000 so far. And the Fed balance sheet has been declining the entire way. And so again, looking back at 2018, do interest rates have to be going down to be bullish? No. Does the Fed balance sheet have to be going up to be bullish? No. Does inflation have to be trending down to be bullish? Nope. All of these things in 2018 were actually the opposite. Fed balance sheet flat, inflation up, interest rates up, and it was super, super bullish. So now people are probably wondering, well, then what the hell are we supposed to look for? What are the factors that actually matter? Well, all of these things do matter, and they have, a fundamental major impact, of course. But the thing that the market is affected by the most, in my opinion, is confidence, right? The confidence of speculators is the number one driver of price action. Are people confident? Are they not confident? That has a massive impact. Is it predictable? Is the Fed being predictable? Well, in 2018, the Fed was very predictable. People weren't sitting on the edge of their seats on every Fed meeting, biting their nails, wondering what Powell was going to say or what they were going to do. They actually knew what the Fed was going to do. The Fed told them ahead of time that they're going to be increasing rates. The Fed balance sheet was going to be flat. It was all sort of forecasted. And every time the Fed hiked the rates, the market knew, because the Fed telegraphed it already. We were recovering from 2008. The Fed had already done some QE. The whole thing was predictable, and there was no problem with it, right? Nobody had an issue with what the Fed was doing because it was predictable. What does that mean? Well, people were confident. People were able to put their foot on the gas and drive faster, so to speak, because they knew what the next turn was going to be, right? If you're driving down the Autobahn at a high speed and you're an experienced driver, you're going to be more willing to put your foot on the gas because you know what turns are coming up next. It's predictable. You've done it 100 times. So yeah, you're going to hit the gas as hard as you can and get your best record time, right? The confidence is there to do so. But if you're an inexperienced driver and you haven't driven on this road before and it's kind of foggy out, and you don't know it's going to be left or right, you're actually going to be hitting the brakes because you don't want to crash. And that is exactly the difference between the current cycle and the previous cycle. And now you might say, well, Bitcoin's still doing well. Yes, of course, but I'm kind of talking about the rest of the market, the lower cap altcoins, the low cap stocks as well. Stock market low cap, the Russell 2000 hasn't been able to break above the 2021 highs. And that's very similar to the total 3, right? The high cap altcoin index, which is sitting near its all-time high, but hasn't quite broken out yet. Now, to go back to my analogy, the total 3 and the Russell low cap stock index, these are the tracks that are more windy and unknown, right? It's not as predictable. It's more risky. And in this environment where people aren't super confident and they can't see the path forward, they'd rather drive on the straight highway, the one that's predictable, that has less twists and turns, which is Bitcoin, the S&P, Meta or Tesla, or whatever top stock you want to look at. This is what speculators are buying right now because it's very surefire. They're confident. They know that it's real, that it's going to do well in the future. So that's what they decided. They decided to drive on that track. Now, when people are confident and they kind of know the roads and the twists and turns and it's not too foggy out, that's when they're going to go for the Russell and the low cap coins, right? The low cap's currently still suffering or just stagnant. The Russell has been able to come up, touch the all-time high, might break it. We're sitting right at a potential blue sky breakout. Is it a coincidence that the Russell 2000 and the total 3 are both sitting near their all-time high right as the Fed ends QT? This blue line, the Fed balance sheet, right? It's going to end up flattening out. Powell said that today. The Fed balance sheet will flatten from here. And there's going to be a little bit of stealth QE to maintain that flat balance sheet. Is it a coincidence that the total 3 and Russell are both sitting near a blue sky breakout potential zone right when that happens? I don't think so. I think it makes a lot of sense, right? Go back in time and you look at, others, low cap altcoin index. The Fed balance sheet is flat here. We come out of QE, even with a flat balance sheet, that blue line, the altcoins go up 200,000% on the index, right? That's pretty epic, right? Huge growth in the low cap altcoins with, an even slightly declining balance sheet, which is kind of interesting, right? When you look at it really closely. The path was clear. People understood where things were going. It was a post 2008 scenario, and the narrative was very clear. We were in a recovery and we were upwards and onwards to better places after 2008. That was the narrative. And there was a tech boom. There was all these things happening that led to confidence, right? It's all about confidence, right? And now the confidence is really only in the high cap coins. But the one thing you can also notice is that the altcoins, the others chart, has only gone up when the Fed balance sheet was either flat or increasing. And the same thing goes with the Russell 2000. It's never really performing well when the Fed balance sheet is declining, right? Fed balance sheet is declining, low cap stocks not really doing much, right? Retesting 2018 levels, or earlier this year, the Russell retested 2018 levels. Same thing with Ethereum. Ethereum retested 2018 levels. Earlier this year, it's the same exact behavior from altcoins Ethereum to the Russell 2000 low cap stock index. Same behavior. And now we're starting to see that we're getting a slight shift in the Fed policy. It's happening slowly but surely. Today, Powell said that they're not sure about December because they don't have the data because of the government shutdown. And so that caused some uncertainty in the short term. But that short-term speculation today doesn't have any actual effect on where the market's heading. And to me, when I look at this and I see, Powell has been projecting that next year, the economy looks like it'll be doing pretty good. We have, a lot of these tech stocks booming right now. Things seem generally stable. There's no crisis, and that's all fine and dandy. The only thing that personally, just based on my study and my experience, the only thing that I care about right now is that people's confidence returns. The Fed balance sheet can be flat. The rates can slowly come down over the next year or two. It doesn't even have to be quick. As long as people see the road ahead And it's not unclear, it's clear, the path is clear. They're going to put their foot on the gas and then prices will rise, especially in low cap assets. The prices will rise when people are confident. And in order to get confidence, the Fed needs to become more predictable, right? Predictability of the Fed is what allowed 2018 to be so bullish. Even though the balance sheet was flat and interest rates were rising and inflation was ticking up, the inflation rate was ticking up. It's like the opposite of what people are talking about right now that we need. But again, it's all about confidence. That's what we need moving forward. Predictability and confidence is really the main factor. And of course, QT ending is a pretty big deal in of itself, right? That takes away the downward pressure and it brings back some confidence. And this is why I think, the Russell, the low cap stock index, is sitting where it is now in a potential all-time high break. And the total 3, the altcoin index for crypto, is also near, a little bit set back from the liquidation event, but pretty close to the all-time high. I mean, I think these are here because the pivot that the Fed is making is more of a risk on signal. And now that all these things are coming together, I think the path is becoming a little bit more clear. Now we have the tech stocks rising, AI is the narrative, and the Fed is now pivoting, and the road ahead is starting to look a little bit more clear, that we're actually, the Fed is actually taking a direction now instead of just sitting still while Trump does his tariffs. Things seem a little bit more like the fog is sort of dissipating and we can see the road slowly opening up. And that's really the most important thing for risk on assets like the Russell and others to perform well, right? The low cap altcoins, right? The low cap altcoins. This is really what we need right now. And I think if we get that, what we're going to see moving forward will probably be pretty interesting. A lot of people are used to the usual waves of the 4-year cycle, which is really a US election cycle, right? That's pretty much what the 4-year cycle is actually based on. A lot of people don't realize that. It's just an election cycle. We pump before and after the election, and then we dump into the midterm elections. And that's the exact wave we've been in. But this time around, we're not in the same position that we were in previous cycles. I mean, everything is different, and all the confidence has been drained and concentrated into the top assets. Right. And so in order for lower cap assets to move, we need confidence to be more available within the general market. And I think that is what we're going to start to get now. Right. Bitcoin has done its job. It's gone from 15,000 to wherever it's going to be. In my opinion, the target is going to be something like 142,000. That's my target price. Could go higher, could be lower, doesn't matter. If Bitcoin gets to that price, perfectly good exit point. Bitcoin may not have all that much more upside to go in this cycle, but if the Fed is ending QT and we're getting a rate cuts and confidence is kind of returning to the market and people feel normal again, well, even if Bitcoin tops in this range, it doesn't mean that it's going to just die immediately if all these positive things are happening. It could just create a larger distribution pattern and then dump into the midterm election. Right? It could be a quicker dump in the end of the cycle. It could be a little bit different. We might sustain higher levels because the Fed is lightening up rather than dropping the hammer like it did in 2021, 2022. The Fed dropped the hammer on the market in 2022. And now it's actually lifting it off. It's kind of a tough call, but I think Bitcoin, it's safe to take profit on it and pivot your Bitcoin to probably more risk on assets actually, right? I mean, maybe that sounds degenerate or something like that, but I think at this point, it makes sense. Your top, low cap stock index, the Russell, the total 3, it's sitting near all-time highs. And it looks like it's ready to break as the Fed is ending QT. So if you wanted to get some insurance, you take profit on your Bitcoin or whatever assets that have performed well up until this point to sort of take an insurance policy on this 80th week model, just in case it does play out while you've taken something off the table. And let's say it doesn't really play out and Bitcoin is kind of just sustaining higher levels. It's sort of just sitting up here for a while. Well, the risk on assets are probably going to start to perform really well. And well, you've taken your insurance and you can put that money into other plays. And there's going to be a lot of trades to make, I think. That's how I see this going, guys. That's my overall outlook, my overall take on the market. I don't necessarily think that we're going to see an exact cookie cutter cycle that we've seen like the thing that everybody expects right now, which is that the 4-year cycle is ending and that we're going to crash and then we're just going to be bullish again in 2027. Doesn't feel that way right now. Again, all of the factors that drove the bear market are now being reversed. And the reason why Bitcoin and the S&P flew up was because the concentration of confidence was in top assets, right? There was no confidence in anything else in this current cycle so far. But that could be changing with the Fed policy shift. That's it, guys. Hope you enjoyed. Definitely smash a like, subscribe if you like this kind of content, and be sure to join the Patreon if you want to ask me questions directly in my morning voice chats, which are Monday, Wednesday, Friday, 10:30 a.m. Eastern time. We do a voice chat for a couple hours, and I'll see you guys in the next video.